Hey everyone, welcome back to your weekly market outlook. This is for the 17th of March 2025. And let's take a look at last week first. Very interesting data that has came out from the US there. Inflation overall generally softer, right? Headline inflation fell from 3% to 2.8%. A core CPI growth per month has also dropped down 0.4% to 0.2%. CPI monthly growth has dropped down from 0.5 to 0.2. Across the board, we're basically getting lower inflation number. The core CPI year on year has also dropped from 3.3 to 3.1%. And we also have the PPI numbers all below the consensus there. Monthly growth 0.3 to 0%. Core PPI growth negative 0.1 from 0.5%. So we're actually looking at inflation coming in a lot softer than what the market is expecting. We also had the Bank of Canada cutting interest rates by 25 basis points. That was as per consensus. UK GDP not looking great. We got negative 0.1% growth last month compared to 0.4% previously. And then I think the big bomb here is the preliminary University of Michigan consumer sentiment. It is at 57.9, and we had 2 consecutive months where the consumer sentiment has dropped hugely below the consensus there. So I think this is actually a huge thing that the market should factor in this week. The consumer sentiment is so low at this point in time. It is actually one of the lowest numbers that we have seen in the past 22 years. So this is actually very important data that I think a lot of market has kind of generally ignored. Last Friday there, we did see a little bit of a bounce in the equity market, ignoring this number here. But if we go through the breakdown of this number itself, it is a pretty bad number. It is showing that the consumer in the United States not really hopeful for the US economy, and the inflation expectations here has also gone up from 4.3 to 4.9%. So we're not getting good data from the US at this point in time in terms of the consumer sentiment there. All right, this week we're gonna have a huge week this week. We're gonna start with the retail sales number. That's gonna be 11:30 at night Australian time, and we are expecting a little bit of an improvement on the retail sales number here. Not quite sure if this is actually enough to move the market here, because I think the market is basically just waiting for the FOMC numbers this week here. But before that, we have the Bank of Japan interest rate decision. We're expecting no change from the Bank of Japan. And then on Thursday, we're expecting the federal funds rate. That's going to be on Thursday morning in Australia. That'll be 5 a.m. We're expecting FOMC to not do anything about the interest rates, but the economic projections is very important. We want to see how many rate cuts are they projecting for 2025. There are talks for between 2 to 3 at this point in time. 2 is the general numbers that we're looking at for 2 more rate cuts in 2025. But hey, the FOMC could surprise the market by just saying we are only considering 1 rate cut, or we might consider 3 rate cuts. But that all depends on the economic projections in terms of how the FOMC views the whole tariff issues that we had in the US the past 2 weeks here, whether or not that's going to have a huge impact onto the US economy there. Again, the market is, buzzing about the R word there, which is recession. So we don't know whether that's actually going to impact FOMC's decision in terms of how they view the economics projections for 2025. All right, and then we have the Swiss National Bank in terms of interest rate cut here. We're expecting a rate cut from 0.5% to 0.25% there, expecting a 25 basis points cut there. And then from the UK, Bank of England interest rate decision, we're expecting no change there, 4.5%. And then on Friday, we're just basically looking at Canadian retail sales number, and that's pretty much it for the fundamental side of things. All right, let's take a look at the technicals here. The Aussie USD has now transitioned above the Ichimoku cloud. We're expecting this week for the Aussie to trade between 63 and 64 cents. Remember, the area around 64 cents are going to be a tough one to break. That's where we had that bearish order block where price actually failed last month. We're likely testing that level again, but for now, I think support is going to be very solid at 62.75 to 63 cents for the Aussie at this point in time. The Euro USD testing key resistance between 1.09 and 1.0950. And if it continues to fail at this level, then we should expect a correction to happen on the Euro USD. That correction will likely test 1.08 support first, but below that 1.08 level, we're going to be looking at 1.07 and potentially all the way down to 1.06 on the Euro USD. Any break above 1.0950, that will take the euro higher, but it's likely going to face one more resistance at 1.10, a key psychological level. Beyond that, 1.11 is going to be the ultimate target for this run on the Euro USD if it manages all the way up there. But yeah, I think we should expect a little bit of a correction happening on the Euro USD. Sterling, very similar situation there. We should be expecting a little bit of a correction here. Price has approached 1.3. It's not tested 1.3 yet, but if it does, we should expect a strong resistance to build up around there, considering how quickly the rally has been the past 2 weeks, both on the euro and the sterling here. We're looking at a little bit of an exhaustion here. Not a confirmed overbought condition as of yet, but around this area here, yeah, it's very tough to make that decision to go long on the sterling here around this key resistance, because there's a high chance price could actually fail around that key resistance, and that would be 1.3 on the sterling there. All right, lastly we have the dollar yen. Dollar yen, we have been looking at dollar yen bulls coming into the market here the past week or so. We have seen the dollar yen gain a little bit, but it's not off the critical range yet. So we basically need to clear off 149, 150. Once we break above 150, then we should anticipate a little bit of a correction all the way to 152. But around that 152 level, if we get there by next week, then it'll be where the Ichimoku cloud is going to be. We might see a little bit of a profit taking happening. We might see people getting out of that position there, or we might actually see sellers coming to the market to push price down if it gets to 152. However, the Bank of Japan this week, in terms of interest rate decision, while we're not expecting anything from them, if they come out with a hawkish comment or they decided to do a surprise interest rate hike, that could push the dollar yen down, right? We should see that before price breaks above 150. But if that's the case, then we are going to be looking at 147 as the final support level for dollar yen. Any break below 147, that would take the dollar yen lower immediately directly to 144. So just keep that in mind when you're trading the dollar yen. We are seeing carry traders coming back into the market, but not in full force. We do see the long position has been gaining, but it's just not quite enough to lift the dollar yen at this point in time. All right, so that's pretty much it for this week. Good luck to trades, and I'll see you soon.